Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, December 17, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We have another day where by the end of the day, the S&P basically did a big nothing burger. She put in what's called one of those signs and or signals of a trend change. We'll get to that later. The big picture is she's been eating time off the clock above all the moving averages, essentially running sideways in and amongst this very channel. You can call this a bullish, flaggish type of formation. She never did come down yet, and I emphasize yet, to test the 20-period moving average. However, that remains a possibility, of course, as we do have Kabuki Theater this week. We have an FOMC meeting that began today and culminates on Wednesday afternoon with an interest rate announcement. The market is expecting a 25 basis point cut. If the market moves after the Fed announcement and or during or after the presser, Jerry's presser, then it will be because the Fed did whatever they did, said whatever they said. Irregardless, we can trade the reaction to something, but we're not going to guess in advance what the market might do. But taking it at face value, what we see on the charts today is a market that's been eating time off the clock, going sideways above all the moving averages. That in and of itself is a bullish position. Now, we'll also say something else. Over the last couple of days, we've seen a little bit of an uptick / pickup in volume. As the market's going sideways, she's actually accumulating in the accumulation phase, which going sideways is another bullish indicator. It doesn't guarantee us anything. It's one of those of note puzzle pieces on the table situations. How about a little commercial in Nvidia today? Hey David, do you have a number in Nvidia? Yeah, I did the work already. This is the exact discussion that went on in the live room this morning. Right of the vertical is today's activity. 127.72 is the number. They bounced off it immediately, came in for a retest, and then took a rocket ride higher throughout the rest of the morning session into the early part of the afternoon. The high in this candle, 131.54 from 127.72. Pretty darn good for an intraday trading situation. Live trading room only type of trade. For most of the type of traders in the live room, it pays for the monthly service, that one particular trade. And as they say in the trading parlance, and then some. Remember this stuff? This is the list of markets that we cover each and every day. Check the IWM just for one example. You can pause the video and read the notes, read the numbers, jot them down, write them down on a sticky note, put them on your charts and see what happened. Let's cover these two. Support number one, support number two, 232.90, 230.85. These are fresh every day. This is what the IWM looked like for intraday traders in the live room and inside the numbers. And as you can see, 230.85 down here did in fact bounce the tape that was your morning low. How you doing? What about the commentary? This is what Inside the Numbers members get when they wake up in the morning, they log in. They get the setup from a trading perspective on the S&P using the SPY each and every morning. So we've got it's a turnaround Tuesday, wake up to a slight pullback across most markets. As for the numbers, you can read the rest for yourself. You can pause the video, do the thing. As for the numbers, we got 606 will be our pivot. If they're below, they go down to 605. That's an important number. And lower, then we have the flip side. And then as the morning wears on, we start to narrow down the numbers based on where we see the thieves in the morning take the tape. We don't have to worry about the stuff up here. They weren't there today. We got to worry about 604 and a quarter, 603.70, 602.75. So the gap left open is around 604 and a quarter. If they open below it, they'll want to fight back to it. We know that just from an experienced trading perspective. And if they're above the gap, they're going to want to run up to 605. We know that because that's the way the market works. That's what folks are paying to be in the live room for. First trade of the day was where? 603.70. They opened below the gap. 603.70 was on the board before the market opened for business. They came into it. They spiked it by a few pennies. They ripped it back up in the other direction, provided the base hit, but came back down. Where did we want them when they came back down? I wanted them at 602.75. Some traders front ran it. They got the secondary run back up to where? 605. Sound familiar? Sure it does. It was in the pre-market notes. Then it was deemed unfinished business in real time in the live room. Got a question? Hey, David, is 605 considered unfinished business? This is as the market was headed back upward. Folks that were long looking for an exit at 605. The answer was yes. Guess what? That was an important place, unfinished business, overhead resistance, yada, yada, yada. All this was on the board before the opening bell. Pause the video, read the notes, go back to the chart and double check the work. The rest of it is narrating it in real time. It is realizing it in real time. It is making changes as necessary in real time. Pause the video, read the notes, go back to the chart to double check the work. As the morning wears on, you've got the entire sequence / schematic for the remainder of the trading day. Regardless of whether they go on a nice rocket ride or they go through the trap door, you have the numbers in sequence below, the numbers above, the important numbers along the way. Like I say on every outset of Inside the Numbers, if you want to be successful using the numbers and the commentary, it's all here for those traders. If you just pause the video, read the notes, put the numbers on your chart, look what happened. You get a point of reference each and every day. Not to mention, we have the list of markets for Inside the Number and Live Room members. And oh, by the way, we have stocks on the move. Today we had two possibilities on the board, AU, and both hit their entry objectives. Let's take a look at the charts of those stocks. First one on the board is Anglo Gold, AU, not Hey You, but AU, getting a buzz cut at the open. Right of the vertical is today's activity. The number on the board from Stocks on the Move for Inside the Numbers and Live Room perspective people, 2363. Came into it, spiked it, ripped it back up in the other direction, gave you significantly more than the minimum required base hit. The minimum required base hit is around 1%. So now you've got the list of markets where you can do the homework yourself. I already showed you had IWM numbers work today. You go figure out the rest. You had Nvidia for Live Room members. You had Anglo Gold for either Live Room or Inside the Number members. That worked out. What else do we see? About Palantir. 72.85 was the top end of the zone. 71.65, second number down. They came up short of the second number, ripped it back up in the other direction, had a ball also at 72.85 right out of the chute. So you could see there were plenty of trades to be had around 72.85 and even a spike of it in Palantir. So if you're an Inside the Number member today, you had Palantir, Anglo Gold, and the SPY right out of the gate. If you're a Live Room member, you had all that plus Nvidia plus whatever else we talked about in there and then some. How we doing? How you doing? Help a brother out. If you're finding success in the Live Room, Inside the Numbers, you think this is a place you could learn, how's the magic calculator working out? Tell other people if you think this is a place they can find value. Do it by posting a comment under the video. Please. IWM filled this gap here that's right above the 50-period moving average. The IWM is my favorite market leading indicator, leading to the downside, down 1.44% today. The Spider or SPY was down 0.41 today, so 0.4%, considerably less than the IWM. My favorite market leading indicator was certainly leading in the downside today. Other than the 50-period moving average and maybe a spike through it, we'll call it 229.25. Of course, you got a big fat round number of 230, but then what you have is the breakup candle low as your bogey. It's also the entrance to no man's land where there's a gap to be filled on the other side. 224.23 is that gap on the other side. So those are your next important places in Camp IWM. Jot them down, put them on a sticky note. What about the folks down at the transportation department? Last night we said we were watching 16,350, give or take. Today's low, 16,349.44. Are there any accidents or coincidences in the market? And the short answer is no sir, no ma'am, no siree, Bob. When you look down at a shorter term intraday chart, you see what happened. As soon as they came into that place, they turned around and went back in the other direction. Now, certainly ran out of time on the clock toward the end of the day. This happened at the end of the day. The point was not that this is a trade today at the end of the day. The point was the numbers work. What about the Q people? What's going on over there? Inside day. What does that mean? The high of today and the low of today was inside the high and low of yesterday. That by definition is an inside day. It's a nothing burger day. They went sideways, eating time off the clock. We're not going to read anything more into that. They're well above all the moving averages, a little bit too far if you ask me, a little bit too far from home base. But until or unless they give up yesterday's low, they're just running sideways, building energy for another or continued move higher. Below yesterday's low on candle closes. That's the last breakup candle low in the sequence. It will open the door for a gap below and so on. What about the XLF? 49.90 was the bogey. They were never able to recapture it. Here they are leaking into the 50-period moving average / entrance to no man's land. We talked about this. What happened to the gap? They filled the gap today. They're below the gap. They closed below the gap. 48.86 is the next place. That's the entrance to no man's land. You got a 50-period moving average after that. And then if they bust through the 50-period moving average, you have the most recent breakout area down around 48. Can they move all these things on the FOMC interest rate announcement tomorrow? Jerry's presser? Absolutely. It can move at any point in time, up and down or both. We're watching the regional banks. Why are we watching the regional banks? Because they have relative weakness against the banking sector, and they also have relative weakness against the IWM. They are a component of the IWM, and the IWM is my favorite market leading indicator. So this is a subset or derivative of the IWM, but I think it's an important component. And they're also at the entrance to no man's land, very similar to what we just looked at here in the XLF, just not there yet. But the KRE, which is the regional banking ETF, is in fact at the entrance to no man's land. The official low, 60 closed today, on close, 63, low today, 63.29. They have officially run a test of no man's land. Be aware, this is an awareness. Write that down, put it on a sticky note aside somewhere. The KRE is important, as is the KBE, which is slightly different than the XLF. They all have different components, watching them all. This one is already, and just like the KRE, but not on a closing basis yet, but they're now have closed and gotten into the no man's land place. So there's a method to the madness. We want to watch these individual subsets. I don't talk about them each and every day, but I wanted to add a different flavor in tonight's video, give you some other food for thought. What about Smashmouth, the Philadelphia Semiconductor Index? Back down today, rejected from the upper portion, the trend line that makes the triangle. They hit it yesterday, rejected today, down $3 plus 1.3% relative weakness against the spider, pitted against the Qs, which they're a pretty good proxy for the Qs. Qs were down about 0.4%. The SMH down 1.3%. Relative weakness against the Qs, relative weakness against the spiders. Of note, puzzle piece on the table, but we will, of note, above all the moving averages, trend is still your friend. We are, in fact, the umpire calling balls and strikes. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.